Hey
Morning,
Jamie,
Bill.
new lows in euro. I actually left a gap from Friday's trading. Someone in our
Yeah,
community brought this up. I like gaps. I used to trade them, before we went 24/6. They meant something. You'd have a breakaway gap, you'd have a runaway gap.
sure.
And someone here today said the potential that this is an exhaustion gap. And actually, the Swiss filled the gap. The euro hasn't yet, but the Swiss filled the gap. Could this be that we're getting close? The fact that we gapped and then not making much more downside progress be a sign of exhaustion of the downside in euro for now?
Well, I mean, we did gap. Was it last weekend or the weekend before? And we never filled the gap. Um, I don't know. I mean, to be honest, as you say, given the nature of the 24-hour nature of forex, the only gaps that you get are opening gaps. Those Sunday nights in
Right.
Asia. So, I mean, my experience with them is rather limited. It seems to me more times than filled. So it wouldn't surprise me at all, especially since we've had a really nice concentrated down move in the last couple of days. That if we did trade back up, fill the gap, and just consolidate, I wouldn't read a tremendous amount into it, but it's an interesting point. I mean, you probably have much more experience on it coming from the future side than I do, just given the fact the rarity of gaps
Right.
in these
Yeah, well,
markets.
you said that everyone was all in short side of euro last week, and that made you nervous, thinking that most of the downside was in there. I concurred with you. I
Exactly.
concurred with you. I mean, we've made some lower lows, but I have a hard time wanting to get short euro down here under 132.
Yeah, no, I don't think you want to get short down here. I mean, we have come an awful long way, but I do think you can still sell rallies. Inevitably, we're going to have rallies. We're markets don't trade well. I think we will, you'll probably get an opportunity at some point, maybe back up towards 133, 133 and a quarter. Those are kind of the perfect entry levels if we get back up there. But I do think, eventually you will see a drift higher. It's just the nature of the beast. I was astounded, late last week that we were able to continue lower, given the fact that the retail community is on a trend. I'm not sure whether it's a microcosm, just because our community tends to be smarter than the average bear, or whether this trend is just that strong that it doesn't matter where your entry points are. We're going down.
Any red
Uh,
news events we should be aware of going into the rest of the week here?
yeah, I mean, the big event at the end of this week is going to be the eurozone inflation figures. They're expected 0.3%. So given what Draghi said on Friday in Jackson Hole, it seems as though they are getting very close to pulling the trigger on QE. Whether or not they'll do it this meeting, my guess is that they won't announce that they're going to launch QE at this meeting. But I think he'll come up with some sort of, we're preparing to, what mechanisms we would use to enact QE. A lot like what they've done with this ABS program, where they're talking about laying the groundwork. Maybe he'll come out and say, okay, well, we're coming up with a mechanism where we'll buy, where we're thinking about buying based on the size of each individual economy within the eurozone, or maybe we'll buy bonds of countries with certain characteristics and not others. I'm not sure what he would say, but I think if he starts to lay the groundwork for a more concrete program to come later in the year, he buys some time while at the same time building that anticipation, which he wants. You get the lower euro, you get lower market interest rates in anticipation of the policy, without actually having to enact the policy, which is Draghi's strong suit. I mean, you think back to OMT. We'll do whatever it takes to save the euro, and he never had to do anything. So by making those preparatory statements, he may be able to, buy a couple of months' time and see what happens on the inflation front.
Okay, any view on the yen coming off a little bit here? Reached the targets I had off that formation up around 104.30, 104.40. To me, it looks like just like the dollar might be vulnerable to a correction, that the yen may
A
be
little bit,
too, back
sure.
down towards 103.
Yeah, maybe that 103.10 area, but to me that's sort of like that 133.30 area, kind of a perfect area to get long if you're in it for the long term. It did seem Kuroda did seem quite adamant that they'll do what they have to do, that they will keep easing.
Okay, great.
If that becomes necessary. So, I think, we're in a trend, and, opportunities, if you get opportunities, take advantage of them. And invariably, I think they'll come. As you say, I mean, we probably are stretched a bit on dollar longs overall, which should bring some opportunities down the road.
Anything in the commodity currencies catching your eye?
They're really tough. They are extremely tough against this backdrop. The Chinese data has not been great of late, but the Aussie holds up, extremely well. Kiwi's been very vulnerable. That's really taken it on the chin from the dairy price collapse. But Aussie has been very resilient despite kind of a generally firm dollar and signs that China is struggling a little bit. So it's a very tough call. I mean, you would think, given the central bank has been, advocating a lower currency, pointing out that the commodity bubble is bursting, that super cycle in commodities has turned, you would expect a pretty well-defined downtrend in Aussie that just hasn't materialized. So I'm staying away from that one. I don't see a reason to be long it. But the price action is it's very impressive. So I would honestly just stay away from it.
Okay, Jamie, thanks, buddy.
You're welcome, pal. See you tomorrow.